This is Matthew Cratter from Trader University, and today I want to talk about the continued fallout from the FTX implosion, in particular BlockFi. This one is especially painful for me to watch since I've been warning people about BlockFi since as early as February 2021, and people have had many chances to get out of BlockFi before it imploded. It's almost like people who have chosen to live in a tsunami flood zone. Do you feel lucky, punk? So this was the original video from February 10th of 2021. I pointed out that they didn't have very good insurance. There was obviously no FDIC insurance, etc. And in this video, I basically warned that you should not be using these yield products at BlockFi, at Celsius, at Gemini, or at anywhere else. So here's BlockFi. They used to offer these interest accounts in the US. They still offer them outside the US, and I believe to high net worth investors, but they were sued. I believe they were sued by the SEC or some banking regulatory authority, and they were no longer allowed as of February 14th to offer this product to US persons, which was definitely a good thing. But if you had an account there, I think you were able to stay. And this is what I argued in all of these videos about BlockFi. Why would you hand over your Bitcoin private keys to a company in exchange for a measly interest rate of 1 to 6% per year, especially when they were rehypothecating your Bitcoin, lending it out to hedge funds who then used it to short Bitcoin? There's just a lot of dirty stuff going on. And the problem with this is you can be a yield hog, but being a yield hog for 1 to 6% is not a very good idea, because if you lose your Bitcoin, as a lot of people now are going to lose their Bitcoin on BlockFi, you lose the next 100 years of Bitcoin's upside, and you need to go back to start. And as in Monopoly, you never want to go back to start. Here is a follow-up video in June of 2022, basically arguing that all these companies had terrible risk management because they were taken down by Three Arrows Capital and Terra Luna. I argued terrible risk management by all these companies. Do you still want to lend out your Bitcoin to a centralized service for yield? I warned again a couple weeks later, is BlockFi now going to zero? And then on Wednesday, I warned as well that there were going to be these knock-on effects from FTX blowing up, and that it was quite probable that BlockFi would get in trouble because it would not be able to get access to the full funds from FTX US, which is the US branch or the US version of FTX. Does this mean that BlockFi and or Voyager are now at risk again? Quite possibly, and I urged everyone to remove your coins from these centralized services as soon as possible. All the while, the BlockFi CEO, Flori Marquez, I believe she's the CEO, was warning or was telling people that everything was fine over at BlockFi. Of course, this is what you have to do when you're running a company like this and you're in so deep and you know their problems. In fairness to her, maybe she did not know that FTX had frozen their line of credit at that point, or maybe it was frozen shortly afterwards. Either way, even an outsider could see that this was not going to end well, and this is what happened late last night. BlockFi has paused withdrawals. They say everything's fine, but you never take such an extreme extent unless you are you would never take such an extreme step unless you are functionally insolvent. This isn't just because they need to upgrade their software or they need to mop the floor and they don't want anyone to slip. This is because they are insolvent. And if you have funds on BlockFi, it's very bad news, because they do not have FDIC or SIPC insurance, because I believe when you move your fiat in there, they immediately convert it to a stable coin. And so this is the problem. These coins do not have any insurance or normal US protections. Now, Sam Bankman-Fried has been online arguing that everything at FTX US is fine, that it's just the international version of the company, FTX International, where the problems are. I believe this is not true. He said it a couple times. FTX US, the US-based exchange that accepts Americans, was not financially impacted by this. I have a question if you are a customer of FTX US, because I've seen conflicting reports on Twitter. But if you have been able to withdraw any fiat or crypto or Bitcoin over the past few days from FTX US, if you just let us know in the comments. Also let us know if you're stuck in there. If you feel like sharing this, I don't want you to leak any personal financial information. But if so, it'd be interesting to hear if anyone's been able to get any money out of FTX US, either crypto or Bitcoin or fiat, since, let's say, since Sunday night. Sources are now claiming, this looks like a pretty fake account, but they actually have very good material, Autism Capital. Sources are claiming that FTX US lent out $200 to $400 million to BlockFi. And because of this, there's now a gap in the FTX US balance sheet. And this is confirmed by this trading halt that they're now talking about. This is not something you do if your company is liquid and is solvent. You don't just halt trading, because what this does is this, or even if it were true, you wouldn't want to do something like this, because you basically create a run on the bank. Because when people hear that tradings can be halted, they immediately think there's something wrong with the company. At this point, SBF has zero credibility. Just because he says FTX US is okay, obviously does not mean it's not, or that it is. But I certainly hope that it is, for the sake of everyone who's in FTX and also FTX International. But it may be that BlockFi took down some of this money, they've blown up again, or they're in they have a mismatch between their assets and liabilities, and they're unable to draw on this line of credit. So that's probably what's happening. But functionally, it's the same thing. FTX US looks like it's in trouble. BlockFi definitely looks like it's in trouble. You can go to their website today and take a look and see digital currency is not legal tender, is not backed by the government, and crypto accounts held with BlockFi are not subject to FDIC or SIPC protections, unfortunately. I thought there was this great interview with Michael Saylor on CNBC yesterday, and a really classic quote which really stuck out to me. We Bitcoiners feel like we're trapped in a dysfunctional relationship with crypto. BlockFi was not a Bitcoin company. They did their best to push the crappiest coins you can imagine. They offered very high, enticing yields to bring people in. They did extra KYC on people, and they did not have the Bitcoin ethos at all. We Bitcoiners feel like we're trapped in a dysfunctional relationship with crypto. We're definitely trapped in a dysfunctional relationship with our government and fiat, but I think we are as well with our crypto brothers and sisters. And it does feel good to be a Bitcoiner at a point like this. And basically, if you've been following this channel, if you've been following other Bitcoiners, we've been warning about this sort of stuff for a very long period of time. So we're not surprised, but it's very, very sad to see this happening. I wanted to add a couple examples here at the end of this video of more people who were sort of Bitcoin grifters or crypto grifters who now are trying to go back to Bitcoin and change their branding. The guys over at Bankless, who are huge pushers of Ethereum and DeFi, now have gotten rid of their .eth on their bios, and they've also put Bitcoin back in. This is what people do during the bear markets. The people who are doing their best to undermine and badmouth Bitcoin are adding it back to their bios as people flee back to Bitcoin. Here's Ryan Sean Adams from Bankless saying, I'm sorry we didn't get more people Bankless before something like this happened. Their idea of Bankless was pushing you into protocols controlled by venture capitalists riding on top of either the Solana blockchain or the Ethereum blockchain, both of which are very centralized projects, and both of which are basically captured by VCs and banks at this point. Certainly Ethereum has been captured by the stablecoin complex. So this is the you have to know who's who and what they're pushing. These Ethereum guys now trying to become return to their Bitcoin roots. Here's another guy, Jeff Garzik, saying, what was SBF lobbying against DeFi? What would have prevented this? DeFi, blah, blah, blah. Basically arguing that DeFi would have been the solution to this. Again, DeFi with all of its pre-mines, with A16Z there, all the venture capitalists, etc. This was decentralized in name only. You may have seen this dyno as kind of a rebuttal to DeFi, saying that it pretends that it's decentralized, but it's not, because it rides on very centralized blockchains. And you often have a multi-sig account that's controlled by just a few people, and you have a huge venture capitalist influence as well, which is not how you become bankless or decentralized. Bitcoin is actually the original decentralized finance, and you can't build on a compromised blockchain like Ethereum or Solana. As I said, these projects were dead on arrival due to the huge pre-mines and the VC venture capitalist involvement. Bitcoin is not a pet rock, as the guys at Bankless, for example, used to say, and other altcoiners. It's the foundation for a truly neutral, decentralized ecosystem. And you don't start working on the second story of a house before the foundation is secure. So Bitcoin's base layer, the fact that it runs on distributed proof of work, this is an amazing achievement, and it cannot be repeated simply because people know how the game is now. You can't launch a coin like this without having a team, having a corporation, and Satoshi found this window to launch everything. Bitcoin was originally obviously quite centralized. It was just on Satoshi's computer, and then next it was on Satoshi's and Hal Finney's computers, but it was able to reach a point of decentralization far before any of these other protocols. It reached escape velocity, and there hasn't been another coin that has been able to do that, at least to my knowledge. True DeFi will continue to be built on layers 2 and 3 of Bitcoin. And then a final, more sober note, if you were surprised by Terra Luna and Celsius and BlockFi, are you going to be surprised when Ethereum dies as well, or becomes so captured that just people stop using it? Here's a great tweet yesterday from Seyfedina Moose, author of the Bitcoin Standard. Everyone shocked and wrecked by FTX, Luna, Celsius, and Three Arrows Capital blowing up thinks Ethereum is a legitimate and sound project, and we can put the bankless guys in this category. Everyone who expected FTX, Luna, Celsius, Three Arrows Capital to blow up and is unaffected by it thinks Ethereum is a doomed vaporware Ponzi. I wouldn't say that it's vaporware, but I don't think that it has lived up to its promise. It's become a captured coin, an OFAC captured coin, and as such, you can't build decentralized finance on it. So I think this is a good warning that it's very easy to see these things after they've happened, but it takes a little bit more arguing from first principles to identify these fraudulent projects before they happen. And I think at this point, Vitalik really is like a Sam Bankman-Fried. He's in so deep that there's really no hope. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below, especially if you have or have not been able to withdraw any assets from FTX US. Thanks a lot for watching, and I'll see you in the next video.